Now let's turn to the consumer. August retail sales beat estimates for the third time in a row, with July's number revised upward. Spending trends appear to be holding up despite growing concerns about the labor market and sticky inflation. So where are we in the retail trade? Joining me now is Oliver Chen from TD Cowen. It's great to see you, Oliver. Been a while since I've seen you. So tell me, how does this make sense? If the labor market is weakening, is it the better-heeled luxury consumer who's still out there spending, or is it everybody?
John, the consumer's been very resilient. We're very excited about that. However, there are a lot of watch-outs. What I would say, John, bifurcation, meaning low and middle income consumer being pressured, and shoppers are watching their wallet. They're looking for value. They're worried about inflation, and consumer confidence has been volatile. That being said, the positives are overall low unemployment and about $1 trillion of savings on the sidelines. So there's positives and negatives, but bottom line, consumers have spending power and they're doing it. Earnings have been better than expected through July, and July momentum has been strong. What happened partly through back to school is some pull forward in terms of demand. Also, we're in a wardrobing cycle where apparel and backpacks are working too, John.
So what kind of a signal are we going to get in the earliest weeks of the holiday season? The holiday season keeps moving earlier and earlier, it seems, about how much discounting is going to be necessary for retailers to keep that flow of consumers going, and what the impact is going to be on margins.
Yeah, John, what we've seen so far in the data is inventories are under control, meaning inventories running very close to sales rates, about percentage point below. That's very good, actually, for margins. We've also had retailers with this unprecedented uncertainty managing to tariffs and changes in supply chain, and also managing to very controlled, targeted promotions. Those are all very good things that we're watching. One thing that is very stressful, though, is price increases. So it's yet to be determined, as prices go up in apparel and other items by 5% or more, what will happen to unit sales. Most people are planning for unit sales to go down by the same percentage that prices go up. So that's something to watch.
Do we potentially see a pinch for retailers that are sourcing from the more tariff-impacted countries?
For sure. And I think it comes back to price elasticity and where and when and how are shoppers prepared to pay more in certain scenarios. Also, companies have had to manage very closely with suppliers to rationalize this and take some margin hits. Our favorite stock ideas, Walmart, Costco, those that understand value and execute to it. We like BJ's too. And then on the other hand, we like Cartier Richemont, which has a very good pricing power too.
So what do you not like?
We're cautious. We're cautious on some pockets in the mall. We're also, unfortunately, I love clothing and department stores, but it's been a tough sector with middle and low income exposure. And we're watching. We're hoping Macy's can comp positively, sustainably. That's something we're paying attention to. And we're watching Target in terms of what they can do there and improving the growth rates and driving more consistency.
What about the cosmetics players that were doing so well a few quarters ago?
Yeah, so our favorite idea here is Elf Beauty, and they've been disruptive, innovative. TikTokification's been a theme in social. We have a buy rating on Elf, and we have a hold rating on Ulta Beauty. Ulta Beauty has an excellent new CEO and management team, and they also printed great results. So it's a work in process in terms of what's happening there. The beauty sector remains very vibrant. However, the beauty customer is also destocking a bit. So we're watching some mixed trends there. Overall, it's a great sector, though, at large.
Okay.